Hello everyone, and welcome to the Quant Strategy Testing Internship program. In this session, I am going to explain everything in detail about how this internship will work, what exactly you are expected to do during this internship, how you should approach trading from a structured perspective, and most importantly, how you should use TradingView effectively for performing your strategy testing. I want you to listen carefully to each section, because this is not just a simple tool training. This is a process-oriented internship where discipline, consistency, and accuracy matter much more than just executing trades. So let us begin slowly and clearly, step by step. First, let me explain the overall structure of this internship. This internship is designed as a quantitative strategy testing program. Now, what does that actually mean? It means that your role here is not to behave like a discretionary trader who takes trades based on intuition or experience. Instead, your role is to behave like a system tester. You are given a predefined strategy, and your job is to execute that strategy exactly as it is defined, without modification, without bias, and without emotional influence. This is very important to understand, because many people make the mistake of trying to improve the strategy while testing it. That is not your job here. Your job is to test, observe, and record. We will be using TradingView as our primary platform. Now, TradingView is a very powerful charting and trading platform, and it provides a feature called paper trading. Paper trading allows you to simulate real trades without using actual money. This is important because it removes financial pressure and allows you to focus purely on execution quality and data collection. For this internship, we will primarily use TQST and ETHIST. Now, why these instruments? Because they are highly liquid, they move consistently, and they provide enough trading opportunities across different time frames. This makes them ideal for structured testing. Now let us talk about the duration of the internship. The total duration is 3 months. Out of these 3 months, the first 2 months are dedicated entirely to execution and data collection. During this phase, your only job is to execute trades based on the strategy and record all the details in the tradejournal system. You are not required to analyze deeply during this phase. Your focus should be on consistency. Then comes the final 1 month, which is dedicated to analysis and report preparation. In this phase, you will go through all your recorded trades, identify patterns, understand strengths and weaknesses of the strategy, and prepare a structured report. In most cases, this analysis can be completed within 15 days, but we keep additional buffer time so that you can do it properly without rushing. Now let us move to timeframe-based testing, which is one of the most important parts of this internship. You will not randomly switch time frames. Instead, your testing will be structured. Each time frame will be tested for 15 days continuously. You will start with the 1-minute time frame and test it for 15 days. After that, you will move to the 3-minute time frame and again test it for 15 days. Then the 5-minute time frame for 15 days, and finally the 15-minute time frame for 15 days. Now, why are we doing this in a structured way? Because this allows us to compare performance across time frames. If you randomly switch between time frames, the data becomes inconsistent and unreliable. So you must strictly follow the sequence. Now let us clearly define your responsibilities. Your primary responsibility is to execute trades strictly based on the provided strategy rules. Let me repeat this again, because this is extremely important. You must execute trades strictly based on the strategy rules. Not based on your opinion. Not based on what you feel. Not based on what you think the market will do. Only based on what the strategy tells you to do. This is where most people fail. They start with discipline, but after a few trades, they begin to interfere. They skip trades because they feel it might lose. They take extra trades because they feel it looks good. This completely destroys the purpose of testing. So you must avoid this at all costs. Every trade that you execute must be recorded in the trade journal system. This is not optional. This is mandatory. You must log every single trade. Even if it is a loss. Even if it is a small trade. Even if you are not confident about it. Everything must be recorded. Now let me explain why this is important. Because the entire evaluation of your internship is based on the data you record. If your data is incomplete or inconsistent, then your analysis will be incorrect. And if your analysis is incorrect, then the entire purpose of the internship is lost. Now another very important concept that I want you to understand clearly. This internship is not about making profit. It is about validating a strategy. So do not judge your performance based on profit or loss. Instead, judge your performance based on how accurately and consistently you followed the process. For example, if you took 100 trades and followed the strategy perfectly, even if you made a loss, that is still a successful internship from a learning perspective. But if you made profit by taking random trades, then that is not useful for this program. Now let us talk about trade journal details. For every trade, you need to record multiple fields. This includes date, time frame, strategy name, market, trade duration, entry price, exit price, profit or loss, market condition, and stop loss. Now you might feel that this is too much data, but this is exactly what is required for proper analysis. In addition to this, you also need to classify the market condition. You must identify whether the market is in an uptrend, downtrend, or range. Now this may seem simple, but it plays a very important role in understanding how the strategy behaves in different environments. Now let us talk about emotional discipline. This is one of the biggest challenges in trading. Even though this is paper trading, you will still experience emotions. You may feel fear, hesitation, excitement, or frustration. But during this internship, you must not let emotions influence your decisions. If at any point you take a trade due to emotion, you must log it clearly as FOMO, which stands for fear of missing opportunity. This honesty is important because it helps us identify behavioral patterns. Now coming to risk management. Every trade must have a defined stop loss and take profit. You must also maintain a consistent risk-reward ratio. You should use a fixed quantity, such as 1 unit, and avoid changing it randomly. Do not increase your position size after a loss. Do not decrease your position size after a win. Because this introduces bias into your testing. Now let us talk about your daily routine. Each day, you should start by observing the market and identifying signals. Whenever a valid signal occurs, you execute the trade. Immediately after execution, you log the trade in the journal. Then you continue monitoring for the next signal. At the end of the day, you should review your trades and identify any mistakes or observations. If something important stands out, you can note it down for later discussion. If you miss a trade, do not try to enter it late. Do not chase the market. Just mark it as a missed trade and continue with the next opportunity. Also, never modify past trades. Never backfill data later. Always log trades in real time. This ensures that your data is accurate and reliable. Now let us move to the practical part, which is using TradingView for your strategy testing. Before you start trading, it is important that you understand the platform clearly, because even small mistakes in execution can affect your testing results. So take a moment to focus on this section carefully. First, you will receive a TradingView link. Once you receive the link, open it in your browser. At the same time, make sure you are logged into your TradingView account in another tab or window. After logging in, you need to open the correct symbol and time frame as mentioned in the instructions. For this internship, we will mainly focus on TGUSD. Now once you open TradingView, you will see a chart interface. This chart represents the price movement of the selected asset. At the top, you will find the symbol search bar. Here you can type TCUSD, ETHUSD, or any other instrument. But again, for consistency, you should stick to TCUSD unless instructed otherwise. Now let us move to the paper trading feature. At the bottom of the TradingView screen, you will see an option called Trading Panel. Inside that, you will find paper trading. You need to connect to paper trading before you start placing trades. Once connected, you will see your account details. Typically, you will get a default balance of $100,000. You will also see equity, realized profit, unrealized profit, and margin details. These are similar to what you would see in a real trading account. Now let us understand how to place a trade. You will see buy and sell buttons. These are used to enter long and short positions. Before clicking on buy or sell, you must define your trade parameters. First, select the quantity. For this internship, it is recommended to always use a fixed quantity, for example 1 unit. This ensures consistency across all trades. Next, define your stop loss. Stop loss is the level at which your trade will automatically exit if the market moves against you. This is important to control risk. Then define your take profit. Take profit is the level at which your trade will exit when your target is achieved. This ensures that profits are captured systematically. Once these values are set, you can place the trade using a market order. A market order means the trade is executed immediately at the current market price. Now let us briefly understand other order types. There is something called a limit order. A limit order is used when you want to enter a trade at a specific price level, not immediately. For example, if the current price is lower, and you want to sell only when price reaches a higher level, you can place a limit order. The order will remain pending until that price is reached. There is also something called a stop order, but for this internship, you mainly need to focus on market orders for simplicity. Now one important point to remember. Even though you are using paper trading, you should treat it like real trading. Do not assume perfect entries and exits. In real markets, there is always some variation in price, especially during fast movements. This is called slippage. So mentally account for slight differences while analyzing your results. Now let us talk about time frames. On the chart, you will see options to select different time frames. These include 1 minute, 3 minutes, 5 minutes, 15 minutes, and many more. For this internship, you should strictly focus only on 1 minute, 3 minute, 5 minute, and 15 minute charts. Each time frame represents how price data is grouped. For example, in a 1 minute chart, each candle represents 1 minute of price movement. In a 5 minute chart, each candle represents 5 minutes of data. Now why is this important? Because the behavior of a strategy can change significantly depending on the time frame. Some strategies perform better on lower time frames, while others work better on higher time frames. That is exactly why we are testing multiple time frames in a structured way. Now let us move to chart types. The most commonly used chart type is the candlestick chart. Each candlestick represents 4 key values: open, high, low, and close. Open is the price at which the candle started. High is the highest price reached during that period. Low is the lowest price. Close is the final price when the candle ends. By looking at candles, you can quickly understand whether the market moved up or down during that period. This is the basic foundation of price analysis. There are other chart types as well, such as Heikin Ashi. Heikin Ashi smooths the price movement and helps in identifying trends more clearly. However, for your testing, you should primarily use candlestick charts. There is also a chart type called Renko. Renko charts are based on price movement rather than time. Instead of time-based candles, they form blocks or bricks when price moves a certain amount. This helps in filtering noise and identifying trends more clearly. We will discuss Renko separately at a later stage. Now let us move to the left panel tools in TradingView. These tools are used for drawing and analysis. One of the most important tools is the trend line tool. You can use this to draw lines connecting highs or lows in the market. This helps you identify the direction of the trend. Next is support and resistance. Support is a level where price tends to stop falling and bounce upward. Resistance is a level where price tends to stop rising and move downward. You can draw these levels using horizontal lines. These are very important in understanding market behavior. Another important tool is the parallel channel. This allows you to draw a structured channel where price is moving between two boundaries. When price is inside the channel, it usually respects the boundaries. A breakout from the channel can indicate a strong move. You can also use measurement tools. These help you measure how many points price has moved, how many bars it took, and what is the angle of movement. This is useful for analysis and understanding volatility. You can also add shapes like rectangles, circles, and lines to highlight important zones. You can even add text notes on the chart to document observations. Now let us talk about Fibonacci retracement. This is an important tool used to identify potential reversal levels. Common levels include 50%, 61.8%, and 78%. Often, when the market moves strongly in one direction and then pulls back, it tends to retrace to these levels before continuing. Many strategies are built around this concept. Now coming to trade execution again. Whenever you get a signal, you need to decide whether it is a buy or sell signal. If it is a buy signal, you take a long position. If it is a sell signal, you take a short position. Always ensure that stop loss and take profit are defined before entering the trade. Do not enter trades without risk management. After placing the trade, you can monitor it in the positions panel. You will see your profit or loss in real time. You can also manually close the trade if required. Now let us briefly talk about the right panel. On the right side of TradingView, you can see watch lists, alerts, and news. The watch list allows you to track selected instruments. News helps you stay aware of major events that can impact the market. However, during this internship, you should not rely heavily on news for decision making. Because again, your focus is strategy testing, not discretionary trading. Also, try to avoid trading during high-impact news events or extremely low liquidity periods. These conditions can produce abnormal behavior and may distort your testing results. Now to summarize this section. You should use TradingView as a structured execution platform. Follow the steps carefully, maintain consistency, and avoid unnecessary complexity. Now let us move to the final part of this internship process, which is analysis, evaluation, and overall learning. This is where everything that you have done during the execution phase starts to make sense. Because until now, you have been collecting data, executing trades, and maintaining discipline. But the real value comes when you analyze that data properly. After completing your execution phase across all time frames, you will move into the analysis phase. In this phase, your goal is to carefully review all the trades that you have taken and identify patterns. You should not rush this process. Take your time and go through your journal step by step. Start by looking at your overall performance. Check how many trades you have taken in total. Then see how many of those trades were profitable and how many resulted in losses. This will give you your win rate. Next, look at your average profit and average loss. This helps you understand whether your strategy has a favorable risk-reward profile. For example, even if your win rate is low, a good risk-reward ratio can still make the strategy profitable. Now analyze drawdown. Drawdown means the maximum loss you experienced in a sequence of trades. This is very important because it tells you how much risk the strategy carries. Also observe how many consecutive losses and consecutive wins occurred. This gives you an idea of the psychological pressure a trader might face while using this strategy in real conditions. Now move to market condition analysis. Go through your trades and check how the strategy performed in different market conditions. For example, how did it perform during an uptrend? How did it perform during a downtrend? How did it behave in sideways or ranging markets? You may notice that some strategies perform very well in trending markets but fail in sideways conditions. Or vice versa. These observations are very important because they help in improving the strategy. Now analyze time frame performance. Compare how the strategy performed in 1 minute, 3 minute, 5 minute, and 15 minute charts. You may find that the strategy is more reliable on certain time frames. This insight is very valuable. Next, identify false signals. These are trades where the strategy gave a signal, but the market quickly reversed. Try to understand if there is any pattern behind these false signals. For example, do they occur more during low volatility or high volatility? Now let us talk about improvement suggestions. Based on your observations, you should think about possible improvements. This does not mean changing the strategy randomly. It means identifying areas where the strategy can be refined. For example, you may suggest avoiding trades during certain market conditions. Or you may suggest adding an additional confirmation before entering trades. All these insights should be documented in your final report. Now let us talk about evaluation criteria. Your performance in this internship will not be judged based on profit alone. Instead, it will be evaluated based on multiple factors. First is discipline. Did you follow the strategy rules strictly? Did you avoid emotional trading? Did you maintain consistency throughout the internship? Second is accuracy of trade logging. Did you record all trades correctly? Did you avoid missing trades or modifying past data? Third is consistency. Did you perform testing regularly? Did you maintain the same level of effort across all time frames? Fourth is quality of analysis. Did you provide meaningful insights? Did you identify patterns correctly? Did you suggest logical improvements? These factors together will determine your overall performance. Now let me give you some final practical advice. Throughout this internship, you may feel tempted to take shortcuts. You may feel like skipping trades, adjusting entries, or modifying results. But doing that will only reduce the value of your learning. The more honestly and consistently you perform this process, the more you will learn. This internship is not just about completing a task. It is about building a strong foundation in systematic trading and analysis. Also remember that losses are part of the process. Do not get discouraged if you see losing trades. Focus on execution quality, not individual outcomes. Another important point is patience. Good analysis takes time. Do not rush through your data. Spend time understanding what the market is doing and how your strategy reacts. Now let us summarize everything briefly. You will execute trades based on the strategy. You will log every trade in the journal. You will maintain discipline and consistency. You will avoid emotional decisions. You will follow proper risk management. You will test across different time frames in a structured way. And finally, you will analyze your results and prepare a report. If you follow this process correctly, you will gain a deep understanding of how strategies behave in real market conditions. This experience is extremely valuable, especially if you are planning to move into algorithmic trading or quantitative research. At the end of the internship, based on your performance and evaluation, you will receive an internship completion certificate. This certificate reflects not just participation, but your ability to follow a structured trading and analysis process. If at any point during the internship you have doubts, confusion, or need clarification, feel free to reach out. We can discuss your questions and ensure that you stay on the right track. So take this seriously, follow the process, and focus on learning. Thank you, and all the best for your internship journey.